Let's start with the real question. Why are you even trying to grow your money right now? Maybe retirement is starting to feel less like a distant idea and more like something with a date attached to it. Maybe life blindsided you. Medical bills, car trouble, family emergencies, stuff that never shows up on the budget. Or maybe it's the simplest reason of all. Your paycheck just doesn't hit like it used to. Groceries cost more, rent's higher, gas hurts, and somehow your money feels smaller every single month. Whatever your reason is, here's the part you should lean into. Building real wealth is possible, and yes, doubling your money is absolutely on the table. But before we get excited, let's be honest for a second. There is no magic button, no secret loophole, no overnight trick that doubles your cash without serious risk. Anyone online promising guaranteed fast money is either selling a fantasy or setting a trap. If it sounds too good to be true, it usually is. Now here's where things get interesting. There are proven legit ways to double your money. Some take a few years, some take decades. None of them are flashy. But they work, and they all revolve around one powerful word: time. This isn't about chasing some underground investment hack nobody else knows. It's actually way simpler and, yeah, a little boring. It's about understanding how growth works, then having the patience to let it do its thing. Where you're starting matters too. If you're starting from zero, even small progress feels huge. Going from nothing to something is technically doubling your net worth pretty fast. But if you already have a solid nest egg, you've got to be realistic. Turning serious money into double takes time. Either way, the truth stays the same. Doubling your money is completely possible, and you don't have to gamble your future to do it. We're keeping our distance from casinos and blackjack tables. The first real step is picking a timeline. How fast do you want this to happen? Are you trying to sprint over the next 2 years, build steadily over 10, or set something up now that quietly works for you over the next few decades? Once you know your timeline, there's a simple mental tool that changes everything: the rule of 72. Don't let the name scare you. No spreadsheets, no fancy math. You take the number 72 and divide it by your expected annual return. The answer tells you roughly how many years it'll take to double your money. Say you expect a 6% return. 72 divided by 6 equals 12. That means your money should double in about 12 years. Simple. Why does this work? Compound interest. Think of it like a snowball rolling downhill. At first, it's small, but with every turn, it picks up more snow. Eventually, it's not just rolling. It's growing faster because of its own momentum. Your money works the same way. You earn returns on your original investment and on the returns you've already made. This rule becomes insanely useful when you compare options. A basic savings account earning 1%? You're waiting about 72 years to double your money. That's basically a lifetime. A corporate bond paying 4%. Now you're looking at around 18 years. A stock portfolio averaging 8%. That cuts it down to about 9 years. For most normal investment returns, the rule of 72 is shockingly accurate. It does get a little off at extreme highs or lows, and yes, there's a more precise formula called the rule of 69, but good luck doing that in your head. For real life, 72 gets the job done. It's also a powerful scam detector. If someone tells you they can double your money in 6 months, the math says they'd need to deliver a 144% annual return. When you hear numbers like that, alarms should be screaming in your head. Historically, the US stock market has averaged about a 10% annual return over the long run. Not every year. Some years are brutal, others feel unstoppable, but over decades, that's the average. Plug that into the rule of 72, and suddenly things get exciting. At 10%, your money doubles roughly every 7.2 years. Picture this. You invest $10,000 into a broad index fund and then leave it alone. After about 7 or 8 years, you're sitting at $20,000, Around 14 to 16 years, that turns into $40,000. By 21 to 24 years, you're staring at $80,000. No constant trading, no genius-level moves, just time doing the heavy lifting. But let's be real, this ride isn't smooth. Some years, the market drops 20% and your stomach flips. Other years, it jumps 30% and you feel unstoppable. The trick isn't predicting those swings, it's surviving them. The people who win aren't the ones jumping in and out. They're the ones who stay seated, hands inside the ride, and let time do what it's always done. Because when you zoom out far enough, that long-term line has a habit of pointing up. Now, if your goal is to double your money on a short timeline, the old-school, play-it-safe moves just won't get you there. Parking cash in a regular savings account or waiting patiently on a slow real estate play is like watching grass grow. Safe? Sure. Fast? Not even close. To move the needle quickly, you have to step into risk, and that's where things get interesting. This all comes down to one honest question. How strong is your stomach? Because speed and safety rarely ride in the same car. Financial pros will tell you the same thing every time. When you chase bigger gains, you're also signing up for bigger swings. The upside can be huge, but the downside doesn't pull punches either. In this game, the size of the reward is directly tied to how much pain you're willing to tolerate. So what kind of plays are we talking about? The high-octane stuff. Cryptocurrency trading. Day trading stocks. Putting money into startups or small businesses. These are the lanes where money can double fast, but they're also where it can disappear just as quickly. Here's the hard truth most people don't like hearing. There are no safe ways to double your money quickly. Once you're dealing with crypto, options, or individual stock bets, you're no longer investing. You're speculating. Yes, you might wake up to a doubled balance, but you could also wake up to an account that's been absolutely wrecked. At that point, it's not strategy, it's a coin flip. That's why, if you're thinking long-term, the smarter move is usually a calmer, more balanced approach. This is where the pros live, not swinging for the fences every pitch, but stacking small, consistent wins. Think of it like baseball. You don't win championships by chasing home runs every time. You win by getting on base, moving runners, and letting consistency do the work. So how does that actually look in real life? First, take the free money. If your employer offers a 401k match, max that out. That's an instant return before your money even touches the market. Next, put your extra cash to work in the stock market, ideally through broad diversified funds instead of risky single stock bets. Then, add stability. Things like CDs, money market accounts, or high-yield savings accounts help keep your foundation solid when markets get shaky. Finally, round things out with something tangible: real estate. Real estate is powerful because it grows in two directions at once. The property itself usually goes up in value over time, and on top of that, rental income puts money in your pocket every month. Historically, home values rise around 3 to 4% a year. Add rent into the mix, and total returns can land in that sweet 8 to 12% range. But let's not romanticize it. Real estate is work. You're dealing with repairs, tenants, and unexpected headaches. It's expensive to get into, and it's not liquid. If you need cash tomorrow, you can't exactly sell half a kitchen. If that sounds like too much, there's an easier option. REITs let you invest in real estate without ever touching a hammer. You buy shares like a stock, collect dividends, and get exposure to property without midnight maintenance calls. Zooming out, the big picture is simple. Spread your bets. Invest consistently in something like an S&P 500 index fund, which gives you exposure to the biggest companies in the country. Historically, that kind of portfolio has delivered around 10% a year. At that pace, doubling your money in roughly 7 years isn't some wild fantasy, it's math. But don't ignore the most underrated investment of all, yourself. Skills, education, and experience can blow past the returns of any stock. Sometimes the smartest move isn't finding a better investment, it's becoming more valuable. That might mean sharpening the skills you already have, earning a certification, or going back to school. The goal is simple: raise your earning power so you have more money to invest in the first place. Another path is building something of your own, a business, a product, a service. This is where returns can get crazy, but so can the stress. A successful business can make stock market gains look tiny. It's also one of the fastest ways to lose everything. For every big win, there are countless startups that never make it past the first few years. If you go this route, be smart. Stick to what you already know. Keep startup costs low. Focus on solving real problems, especially with service-based or online businesses. And understand this going in. Most small businesses take 2 to 3 years just to turn a profit. Many never do. The golden rule here is simple. Only risk money you can afford to lose, and only jump in if you're ready for the time commitment. Now, if you've tried all the clever strategies and nothing seems to move the needle, it might be time for a mindset shift. Sometimes the fastest way to double your money isn't an investment at all. It's increasing your income. An extra $200 a month from a side hustle doesn't sound flashy, but that's $2,400 a year you didn't have before. That steady boost can be more powerful than stressing over squeezing an extra % out of your portfolio. Instead of staring at charts, put that energy into building skills, launching a small side project, or monetizing something you already enjoy doing. And if you really want to hit the accelerator, there's one move that works almost immediately: cutting expenses. Slash your spending and your savings rate can double overnight. That's the secret weapon behind early retirement strategies. When you spend less, you're not just saving more, you're also lowering how much money you'll need in the future to live comfortably. Start with the small stuff: subscriptions, daily habits. Then look at the big hitters like housing, insurance, and transportation. Those changes move the needle fast. Doubling your savings rate means more cash flowing into investments, and that speeds everything up. Is it easy? No. Is it for everyone? Definitely not, but you know your situation better than anyone. Deep down, you'll know whether tightening the belt makes more sense than chasing higher income, or whether the opposite is true for you. At the end of the day, doubling your money really comes down to 2 simple questions. How fast do you want it to happen, and how much stress are you willing to live with while it's happening? If you're fine with high stakes and sleepless nights, you can absolutely chase fast growth. Big risks can bring big rewards, but they can also wipe you out just as fast, and that's why most professionals quietly steer people in the opposite direction. If you don't love the idea of watching your savings swing wildly or possibly vanish, the smarter move is to slow down and play the long game. That means building a diversified mix of investments and letting time do the heavy lifting. Financial advisors will tell you the same thing over and over. Doubling your money isn't about one big move. It's about balance, discipline, and sticking to a plan long after the excitement wears off. Yes, high-risk plays can deliver quick wins, but the odds of blowing yourself up make them a bad fit for most people with real-life responsibilities and real goals. So before you jump into anything, pause and ask yourself a hard question. Does this actually match who I am and what I want long-term? Because the best strategy in the world still fails if you can't emotionally stick with it. Here's the part nobody loves hearing. The most reliable way to double your money is boring. No fireworks, no dramatic stories, just a solid plan and the patience to stay with it for years. That means learning how to tune out the noise. You stop chasing the can't-miss stock tips from your cousin. You stop trying to guess the perfect moment to buy or sell. You stop freaking out every time the market gets a little shaky. The people who actually succeed aren't always the smartest or the luckiest. They're usually the most consistent. They start early, they invest regularly, and they don't interrupt the process every time fear or excitement shows up. They let compound growth quietly stack win on top of win. No, your money won't double overnight, but give a smart plan enough time, and it almost always does. And once it doubles the first time, something powerful happens. It keeps going. That second doubling comes faster than the first. That's how real wealth is built. Not through flashy shortcuts or get-rich-quick schemes, but through steady investing, patience, and letting time do what it's always done for those willing to wait.